Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Monday, and we are now at the 29th of October 2018 and just after 4 p.m. Central Daylight Time. Settlement prices just came in. Yeah, they knocked the gold down $8 today, silver down a whopping 25 cents. The market that confused me, I thought that we should have been lower in the platinum, but I was dead wrong on that. And copper very close to unchanged. There's been a lot of reports coming out on copper, why people think it should find a base here. I don't know. I've got my doubts. If the U.S. and China continue in these trade wars, I just don't know. We'll see what happens. One of the reasons the stock market broke from 230, if you took a look, all of a sudden, if you turned your head and you came back, the market collapsed. And I saw Bloomberg carrying a story about the fact that the president out of the White House, they're saying that they will impose the tariffs again in December if at the G20 meeting, President Xi and President Trump don't break this stalemate on talks. That then they go into, they announce tariffs December 20th. You have a 60-day public comment period. They go into a place for the February. So did the president say that? Is this more of the goosing back and forth to get the two of them to talk? You're never going to know. It's just the way that it works. Normally you don't discount the same information again because we knew he was going to do that anyways. In the weekly chart of gold, you can see how the market peaked out and is slipping back. And for the week now, we're down $8. Okay, but we're still over the 18-week moving average. This is just a closing chart. So on that basis, the bias is up. What the market did is it challenged back into the lows of that pennant formation. And if the market gets much below these lows, then the pennant's wiped out. You don't have anything there. This isn't the prettiest formation to see. We like to generally see a pennant make a move to the upside. You have lost, L-O-S-T, the pattern of higher lows, higher highs. You now have a higher high, and today's low took out the previous break low. So the way that I define a trend, the market stepped out of its trend today. Yes, the market is fighting at the 100-week average in green, but the 18-week average of support's lower at 1220.30. You can see that the market was not strong enough up here to get to the upper Bollinger Band. You made a run way back here, and then you basically worked higher, but couldn't really get a punch to the market to the upside. And what I hate is you lost the embedded reading. So now with that number lost, the odds strongly favor that price and the 18-day average will make a run at each other. Do they have to? No. But typically when you lose an embedded reading, that's what occurs. So that's what I'm looking for. On the GLD, you still have here, if you look, the embedded reading. So that's stronger than the futures markets. Like the futures, you got through a previous break low, so now you have a higher high, lower low. If when you reopen, you lose that embedded reading, the odds would favor price in the 18-day average coming together here. And we've talked about the fact that the miners are much worse than the futures themselves, and that continues on with lower highs, lower lows, momentum down. This is a bearish market. You'd have to get over 1958 to negate it. The potential is here that if you want to make a run, maybe you can get to the lower Bollinger Band for support. Gold-silver ratio breaking out in favor of gold over silver. And as you can see, we're to 8,500, higher than the most recent high that we made. This does not bode well for the base metals, and it's why I was surprised platinum was higher today. But in the silver, you can see a capitulation. And again, what do we have to say about it? You're still stuck in the sideways action of the Bollinger Bands. So this rally last week, honestly, just failed against those numbers, pulling back. Now I won't be surprised to see it fail on the downside at 1433.5 and see if the market can find its footing. Momentum down, no trend. You got a higher high, lower low, support 1433.5. In the copper, the rally today back to the 18-day average is where the pros hit the market. and they dropped it back to the lower Bollinger Band where they probably covered it. And I say that because you're just stuck within these bands, and until you break out one way or the other, it's a hard trade to catch. In the platinum, I was surprised, I admit this. Higher lows, higher highs. I didn't think the market was going to be able to even get through 839.70. It did, and now maybe it gets to the upper Bollinger Band. More likely, I would think it gets pulled back and has to fight between the combination of the 100-day average of closes and the 18 coming in at 832.80 to 833.60. In the palladium market, you still have the higher low, higher high pattern. This could turn bearish on you right away. If you take out 1065.30, it would give you the potential for lower highs, lower lows, under the 18-day average. Momentum's already pointing down. You can get a fast break on something like that if it grabs hold. I don't know if it will, but that's what could happen. In the dollar index, we keep running to the upper Bollinger Band and stalling. We have the embedded reading. That's when you take both readings out of the slow stochastic and put them up over 80 for 3 or more days in a row. And that says that on the pullbacks, the market's still getting bought. When the red line closes back under 80, then I look for price in the 18-day average to make a run at each other. Right now, I just say the bulls have grabbed control of this market, and they grabbed it in a neat way. So we'll see what you do. I want you to look. This is how I set up my phone for gold and silver. And this is the gold, the silver, the copper, the platinum, as you can see. I can bring up the high, low, last, how many trades traded there. I can say bring up my gold chart. Yes, you just talk to it. It'll bring it all up. You can order, place on the chart on this if you have an account with us. You can set price alerts. So there are times when I want to know if a price is hit. I'm in a meeting, I'm going somewhere, I'm downstairs having lunch, bang. If a price is hit, I know something's gone off right away. My phone will go off and let me know that. You can set up streaming metal quotes. Say things like the gold chart, it'll bring it up. And yes, if you preset your studies, they'll come up on this as well. You can also
current prices. Gold December is down -2.2 and last traded at 1,212.2. Silver December is
I want to do something. It's all there. QT messaging all in here. So when I'm sending my clients my research, my orders, what I think they should do, or my videos come out, they're all through here. And of course, you can set up any way you want with preset quotes, your own custom quote areas and the like. Lots of news, and you can guide the news to the type that you want as well. It works on both Android and iOS phones. It's real simple to install. You're going to get it from your store that you go to. What you'll need, with just like in all your other apps, is a user ID and a password. Call my staff for that. We'll be happy to give it to you. There's our number. You can sign up for this on our website as well, and you can click right up here at any time to get there. I'm Ira Epstein. You have a good day.